Hello, everybody, and welcome to episode number 30 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Ray the Machine, and I'm joined here by my civilized co-host, former market maker of 20 years. Nowadays, he's looked upon as the spokesman for reformed degenerates, a man who sees the markets clearer than the tops worn by the women of South Florida, the man who seems to have a bottomless pit of analogies. I'm talking about JJ. JJ, how's it going?
Good, brother. How you doing today?
Doing excellent. Doing well, I guess excellent given the conditions of, what's going on. And so our guest today, a man who traveled the world backgammon circuit. He then graduated on to become a professional poker player, winning a prestigious World Series of Poker bracelet and a cool $400,000 in his first major tournament. He then landed a trading job at Goldman Sachs, then went on to manage $1.6 billion portfolio for a pre-eminent U.S. macro hedge fund. The founder of Cerebral Gym, the world's first gym for the mind. I'm talking about James Vogl. James, how's it going, brother?
Good. How you doing?
I'm doing excellent, man. Appreciate you joining us, amidst all this chaos going on in the world. I mean, how's it going over there in Europe?
Well, it's a pretty surreal time. We traded through the 08-09 financial crisis, and this is nothing like it. It just feels, you walk down the street and it's like a ghost town. It's a zombie, even in central London.
Wow.
Just as an example, my father, who's 76, he's sort of not feeling great and may have a temperature. They won't even test him in the hospital, and you can't even buy a thermometer. Amazon is sold out for a month.
Oh, wow.
I go to 4 local chemists. They don't have any. So I ended up borrowing one from a friend, and luckily he doesn't have it, so he doesn't look like he's got the corona. But it's crazy times.
Wow. That is amazing.
Yeah, sure it is. Well, thanks again for joining us. And so for the listeners, you've written a book, which is yet to be published, but, I've been lucky enough, you sent me a manuscript. It's great. I'm about 2/3 of the way through, give or take. You mentioned something I wanted to start off asking you about. You were offered to host a reality show teaching 13-year-old girls how to gamble. What was this about?
No. It wasn't quite 13-year-old girls.
That's what you said. That's what you wrote. Wait.
And we're in trouble.
He's switching the.
Maybe I need
and we're in trouble. Pull up.
13 girls, not 13-year-olds.
Oh, I misread it.
Women. Yeah.
Horizon low. Pull up.
I better go and check that.
Yeah, I thought that was weird. I was like, wait, why is it? But yeah, go ahead.
Well, you remember back when poker exploded in the early 2000s, and
yeah.
I won this bracelet in 2004. There were sort of crazy ideas, every kind of spin-off from poker, and one of them was, the reality TV shows at the time were like Big Brother, and they were thinking, could they do one in a casino where they teach amateurs, or as it happens, 13 girls, the thesis for this show, how to gamble. But I couldn't really see myself saying, "Oh, this is roulette." You spin the wheel and just see where the ball lands.
Yeah.
It wasn't really for me, but it was flattered to be asked.
Yeah. I apologize. Not 13-year-old girls. I was like, yeah, what? Like
Child Protective Services. Please be aware that was an error.
That was an error, right. So James. I mentioned in the intro, you went from backgammon to poker to trader, now founder of a company, entrepreneur. One thing I didn't list was you were a tennis player in your youth. You spoke on this in the book. I think there was a good, it's a good story and a good lesson from it. Do you mind sharing it with us?
Yeah, I wouldn't go as far as calling myself a tennis player. I tried to play tennis.
Yeah.
It was one of these things where I just got dragged into it. At my local club where I'd always been a member, this Russian coach came over. His name was Konstantin. He was about 6'5", played in Wimbledon. I think he won like maybe 7 Russian championships, but he wasn't allowed to travel during communism. So he was just the most. He never made it to the highest ranks, but he was the most wonderful player, beautiful technique, and he attracted loads of top juniors to this very local club near where I live. And I just sort of got caught up in it with all the other kids that were playing, and all of a sudden I was playing all the time. I think I started seriously when I was about 14, which is much too late. I mean, if you want to be a good tennis player, you've got to start at 5 or 6, really, at the latest. But I really enjoyed it, and just after school every day, found myself playing, and then my whole holiday time was traveling to tournaments. And I think when I finished high school, I took one year as a gap year to play tennis and travel the satellite circuit. And I said to myself, if I didn't get a world ranking that year, I'd give it up and go to college. And I didn't really win a single match on tour, so it was an easy decision for me to make, to give it up, basically.
Mm-hmm. And I like, because the what you proceeded to say was kind of like, you have to choose the right endeavor for you, right? That was kind of like your point, is that like you didn't have the natural skill, and so you putting all the effort into it wasn't maximizing, I guess, your expected value, as you said in the book.
Yeah, exactly. I think at the time, when you're in your early teens, you don't really think about it. You just do what you enjoy.
Right.
But later, I realized you want to position yourself in the game where you've got an innate talent, or
Right.
something you can do well in, like naturally.
Right.
And it just so happened that like the last tennis tournament I played was at the end of the summer of this gap year, and there was a backgammon tournament that very same day that was happening. I got knocked out of the tennis tournament in the morning. My father happened to see this backgammon tournament was advertised and said, "Oh, you fancy yourself as a backgammon player? Go along." I went along and somehow managed to win a bronze medal, so came in third. And I never played in a tournament. I never played competitively backgammon before.
Mm-hmm.
And obviously I could have just been lucky, but I met some people there at the tournament. They invited me to the club. I thought they were trying to hustle me at the beginning, but very quickly sort of realized, I could hold my own, and was winning money straight away when I started. And I was just much more of a natural,
Right.
and it came easily. And there's this paradox of whether things come easily in life or not, or you have to work at them. And obviously, everything you have to work at. But when something's easy, it doesn't feel like work. So I would play 60 hours a week and got totally consumed and dragged into this world of backgammon. But looking back now, all those years playing tennis, really, obviously, it wouldn't have been healthy if I was gambling and playing backgammon in my teens. But there were so many other things I could have done,
Mm-hmm.
probably other than tennis, which would have had better results for me.
Right, for sure. And then backgammon, you playing backgammon, that's how you got introduced to poker, correct?
Yeah, it was a natural progression, because the
Mm-hmm.
backgammon world started to die out a little bit when these computer programs came in that played perfect backgammon, and everyone's level improved. Not many people wanted to gamble on it anymore, and it was sort of a lot of backgammon players made the transition. Gus Hansen being the foremost of them, and he sort of big early successes on the World Poker Tour in the early 2000s, and then a lot of other backgammon players copied. And the vast majority did very well in poker, because the training from backgammon is very similar. It's all about risk reward and thinking analytically in terms of EV. So it was a pretty natural progression, although I didn't necessarily take to poker like a duck to water.
Mm-hmm.
I would say it took me probably 6 months to a year just to break even.
Okay.
Whereas backgammon, I was pretty much winning from the first month.
From right away. Yeah. Interesting.
Yeah.
Interesting. Was Gus like really the first one to, I guess, like represent the backgammon players? Did others see his success and then kind of follow suit?
I think even going back further, Eric Seidel used to be a
Oh
backgammon
yeah,
player.
Seidel. That's right. Yeah.
Jason Lester. I think that there were lots of them from the 80s.
Okay.
Um,
Okay. Yeah, because they
but
was
I
playing
think
in New York. They was playing in New York clubs, I think,
yeah,
right?
yeah.
Yeah. Okay.
Was it the Beverly or the Mayfair, or the Cavendish? But I think Gus, from my generation, or Gus is just slightly older than me. Yeah, I think he was the first.
Okay.
He was
Cool.
the first.
Was his backgammon style anyway like similar to poker style? I don't really know anything about backgammon, so I don't know if that's even applicable.
Yeah, there's not really a style in backgammon. You just
Okay.
kind of make the computer moves, but he's incredibly analytical. I mean, I know he's known as being a gambler and up and down. But I tell you, there's not many people that think about games just quite as coherently and logically as him. I mean, and he works very hard at it, but he's a brilliant mind for it.
Yeah, he's a funny character, funny character as well. So
And it was interesting when he started playing poker, he was playing a completely different style to anyone else. I mean, we watched on TV and everyone was playing so tight.
Right.
I remember going to a tournament and I watched him, and I think he raised like 18 consecutive hands in a row before anyone even played back at him.
Yeah.
You know, he was just walking over the fields, and then of course everyone copied that style and it went full cycle.
Right. Yeah. No, you know, I guess like really thinking about it now, James, he kind of was like ahead of the game back then. You know what I'm saying? Like with that aggressive style, I guess. Which eventually got adopted. So, that's one more poker thing, and then we'll move on from that. So you won the World Series of Poker tournament at what was it, age of 23, correct?
Yeah.
Wow. Yeah. So in your first major tournament, nonetheless, I mean, just describe like that feeling. That had to have been. And it was in Binions too, before they even moved it to Rio. So that's a.
Yeah, it was the last year they held it at Binions. Obviously, we didn't know it at the time. It sounds crazy, but I didn't know what the World Series meant back then. It was the first tournament I played. I wasn't actually even in Vegas to play it. I was there for another tournament, and it was starting the next day. And I just found out about it, and someone said, "Why don't you play before you go home?" And I said, "Well, how much is it?" And they said, "It's $2,000 to enter." So I said, "Yeah, why not?" I shipped in the 2,000, chipped it in, and 48 hours later, I won it. And I didn't even know they gave away gold bracelets for winning that tournament. I thought the gold bracelet was only for the main event, so it wasn't like I was doing cartwheels, kind of like, "Wow, this has happened to me." It's the most amazing thing. I was just 400 grand's pretty nice when you're 23, and it was kind of like a nice thing to happen, but it didn't have the same significance for me that I think it would do for a lot of people that have been trying to win a bracelet for years.
Oh yeah. Oh, absolutely. Oh, I mean, I would be absolutely thrilled. Not that I don't really play too many tournaments, but I go out to Vegas once in a while, during the summertime. But that had to have been really sweet. So your transition into working, for Goldman Sachs was interesting about how it came about. You just talk about how you got offered the job, and then also, the decision that you kind of faced between, hey, do I continue with poker? Do I take this job?
Yeah, I mean, the thing that changed my life more than winning that tournament was the knock-on effects of it, rather than the actual tournament itself.
Okay, yeah.
Just, I don't know if it's fate or chance or randomness, who knows. But I think the day after I won that tournament, I was in Vegas, and some of the regulars from the game back in London, they called me up, and they were at the table and they had me on loudspeaker just to sort of congratulate me. And there was a trader at the table, and he said, "Who is that guy?" And they told him about me, and they said, "Oh, he was really into poker as an amateur enthusiast." He said, "I'd like to meet him or me when I get back to London." And I thought, "Oh, everyone says they're a trader. Who is he?" And I found out he worked for a fund called More Capital, who are pretty much the most sort of premium name in macro hedge funds. Lewis Bacon, the founder.
Yeah, no kidding.
Been around for forever.
Yeah.
And so when I got back to London, I went to meet him. We had lunch, I think, in a sushi place in Mayfair. And after we got on pretty well. And after the lunch, straight away, Edward took me up to meet Lewis.
Wow.
And I was like, that's pretty crazy. This guy's a billionaire. He's one of the most successful traders of all time.
Exactly. And there you are.
And I'm just sitting in his office and looking like at all these quote screens around, and he's not wearing any socks and sort of just sitting there, very zen-like, watching the quote screens and just sort of firing questions at me. And we were just having a chat, really.
Wow.
And I think he was looking for an assistant at the time, and that's why this trader that worked for him introduced me. But he said, "You know what? You need some experience in the markets first before you work for me. Go away and get a job at a US investment bank and come back in the future." Okay. So basically, I did, and got a job at Goldman, and then I ended up working for him about 7 years later.
Now, let me just jump in really quick. Now, I've my background is the opposite end of the spectrum than Goldman. So, we always revered you guys. From Michael Lewis's book, Liar's Poker, we know about the process of Goldman. Tell us a little bit about your experience, because I want our listeners to know what it's like to kind of go through the gears at Goldman. Tell us about, how they interviewed you, that process. Was it quick? Was it like the 20 interviews that you hear about? That sort
I
of
think
thing?
it's slightly different because Michael Lewis wrote about Salomon Brothers, which
Yeah,
turned
he
into
talked about some of the stuff there.
Lehman's and Citi. But I guess they're both big US investment banks. But Salomon had a lot more characters. Goldman's quite a machine.
Yes.
Very corporate. Yes, it was a sort of long interview processes. I probably had about 20, but I think I'd sort of got the job there pretty early on in the interview stages, and it was more a question of meet everyone that works there and decide sort of which desk you're going to work on.
Nice.
And for me, the interview process was kind of fun because all they really wanted to do was talk about poker and gambling and backgammon. They didn't it wasn't too taxing. It was just sort of getting to meet people and get a feel for the place.
Now, was this when they were still a partnership, or were they public at that point?
They were already public. It was 2004. Yeah, I think.
Okay.
It was already. But most, a lot of the partners were hands-on. I mean, they take the interview process very seriously. The number of interviews you have to go through. And I think my route in was very unusual because, nowadays, or even at that time, they only really took people from, the graduate program.
Yeah, Wharton, Harvard, right?
Yeah, a lot of the kids, like the first word they ever say is Bond, or whatever, and they end up getting jobs at Goldman. They've done internships there in their school holidays and through college, and it's their dream. And for me, I had a degree in economics from LSE, but I wasn't a favorite markets, and it wasn't really a job I'd ever thought about doing. But I think they just wanted, a bit like trading places, sort of experiment with
exactly, Randolph and Mortimer.
Yeah, I think they kind of just wanted to see how I'd turn out. And,
that's amazing.
Funnily enough, I didn't turn out very well. I was a hopeless market maker.
Oh, really?
Which was the job they hired me for.
Oh, okay.
Yeah, so the first 2 years of my career there were a bit of a shock because.
So did you work with the crew from SLKC after they had done the merger? Spearleads and Kellogg? Were you on that floor?
I'm not familiar with them.
No, because Goldman acquired them, I think around 2000 or something like that. They paid $6 billion for SLKC. All my friends worked there at Spearleads
really?
and Kellogg. And then they were acquired by Goldman. So that's how I weaseled my way to a visit to the Goldman trading floor, because they would have never let riffraff like me into Goldman, like even past them, like maybe to deliver a pizza, right? But not near their trading floor. So I got to see that floor, and there was about 400 guys on that floor, guys and girls, and it was a heck of a machine.
Yeah. I was in London on the.
okay.
I never actually went to the New York floor there.
Oh, I see. Okay.
Yeah, I miss the graduate training and all that kind of stuff.
I understand.
Yeah.
So,
but it was definitely a culture shock being, sort of getting up and being in the office before 6 rather than going to sleep at 6 as a poker player.
Yeah. So James, I thought the way you broke it down, reading through the book, how you decided to actually take the job as opposed to sticking with poker. Do you want to speak a little bit on that? How you made that
maybe
choice?
I should just because we haven't really said what the book is.
Yeah.
Maybe I should just quickly introduce it. And so there's nothing to plug yet because it's I'm sort of speaking with agents and publishers now. Nothing to sell yet, but basically the book's called 51% Certain, and the working subtitle is Thinking Through Life Like a Poker Player. And the idea of the book is basically poker players, not just poker players, but all games players and traders, think in kind of a similar way, and it's very different from the layman. And a lot of people are intimidated by gambling or probabilities, or thinking in this kind of what gamblers think it's logical, but it's certainly a different train of thought to certainly what my ex-wife, how she thought. But so the idea of the book, every time, say over the last 4 years, some scenario came up in my life where I thought about something slightly different from the consensus, but there was a gambling or poker back sort of underpinning for that thought process. I just jotted it down as a note on my phone, and had lots of sort of anecdotes as well, and mixed the two together. And the idea is, if a non-gambler or a non-trader doesn't necessarily think in that way normally, reads this after reading the book, maybe when they come across a problem, they won't think totally in the same way, but they might have some more kind of weapons in their armory to combat some certain problems, and especially when it comes to risk taking as well, attitude to risk taking. So when you ask me, how did I use that sort of poker background to decide with a job? Well, basically, I wasn't sure whether to take the job at Goldman because I just won this big poker tournament, and the games were very good at the time, meaning I was making decent money at it, and it was kind of fun, like that offer to do that TV show we talked about at the start of the podcast. And it was really a toss-up for me, and I couldn't decide whether to take the job. And I think I had a serious girlfriend at the time, and her father was also putting a lot of pressure on me to get a square job. And I couldn't decide. Actually, I sort of slightly altered it for the book, but what actually happened, this is a pretty crazy story, was after I won the World Series, I was in Vegas still playing some of the other tournaments, and this girlfriend came to sort of celebrate with me, and she said, look, if I come to Vegas, you can't just be playing poker the whole time. You've got to take a little bit of time off to hang out with me. I said, fine, come out. And we sort of had fun and partied for a few days. But, who wants to sit by the swimming pool in the middle of the summer in Vegas, when there's all that poker action? And so
I'll take the pool.
You take the pool?
Oh yeah.
You haven't got that sickness.
No, he doesn't. He's not a degeneraate like us, James. He's not a true degenerate. Yeah.
So I think one night I woke up at, I don't know, 4 a.m, as you do in Vegas, or jet lag, or not jet lag, but wake up at random hours, and she was still sleeping, and I didn't want to wake her up, so I didn't sort of get dressed or anything. I just slung on my dressing gown. I was staying in the Bellagio, and I walked downstairs in the elevator to have a look around in my dressing gown, and obviously gravitated to the poker room. And there was a great game going on, and I got some chips out from behind the cash desk, and I sat down in the game. And come 11 o'clock in the morning, she found me in the poker room, and I was winning quite well in this game, and it was a really soft game. And she said, look, I really want to go and see the Grand Canyon. And I'd been to Vegas, I don't know, maybe half a dozen times before, playing backgammon and a little bit of poker before this. And I'd never been to the Grand Canyon. It didn't even occur to me. I was just there to play poker. And I was like, her name was Laura. I was like, Laura, I can't go. I'm sorry. This game is too good.
Boy.
And she said, no, you got to go. And eventually I thought, look, she's come all the way out to Vegas. There'll always be another poker game. I'm going to go and do this like helicopter tour or whatever of Grand Canyon, and I can come back, maybe the game's still going. And a guy that was sitting next to me, just a random player in the game, he'd overheard this conversation I had with Laura, and he said, you got it all wrong. Like, the Grand Canyon's still going to be there this time next year.
Oh, no.
But this poker game won't be. Like, this is such a great game. How can you leave?
Oh, brother.
And I was like, you know what? You're absolutely right. Laura, like, go on a group tour without me, and we'll hang out when you come back. And she did actually. She did. And so I stayed and played in the game, and it was a pretty good game. And then basically, when I had this job off from Goldman, I sort of thought about it, and it was a little bit like the sequencing of events. If I didn't take the job offer at Goldman, poker would still be there. But if I turned down that offer at Goldman, I may never get a chance to go in the city again.
Right.
So I thought, via that kind of logic,
yes.
basically keep your options open by taking the job now, even if I didn't really want to and my heart was in poker. I thought, you know what, if it doesn't work out, I can always go back to poker.
That's pretty amazing. I have actually a friend of mine who did the exact same thing as you, but the girl got on a plane and went back to Canada. So yeah.
Canada's a bit closer than London.
Yeah, exactly.
That's funny. That's funny. Yeah, it's it's funny now. Like when I meet people in real life now, James, I tell them I'm a trader now, and the responses I get is so much more favorable than when I say I'm a poker player. It's like, I mean, the big issue with me a lot of times with the girlfriends was the father-in-laws, or their fathers. It's just like, I don't know. It's a hard thing to explain to people that, hey, this is what I do for a living, but.
Well, look, I had to start with a Jewish mother, persuading her.
Oh, God.
Okay,
Yeah.
and the amazing thing is there's a history of card playing and not gambling, but card playing in my family, so she sort of understood it pretty well.
Okay.
But everyone thinks, poker is gambling. They don't really understand edge and getting your money in good and so on, having plus EV. And she was always kind of against it, but understood, sort of backed my judgment, to continue, but never liked it. And then it was only when I won that tournament for 400,000 that she said, "Oh, go and play more. You're winning good money."
Right.
It was just that, she didn't realize, I happened to get lucky in that tournament, but she didn't care about the fact that I won, I don't know, say 85% of months or winning months in the couple of years gambling before that.
Wow.
Right.
It's sort of, people are so results orientated in the way they think, rather than EV. And I think I spend probably the first third of the book trying to explain to non-gamblers how to think in terms of EV.
Yeah, no, and I think you do it really. I think you do it in a real digestible way for people who don't have the backgrounds that we do have. And I wanted to bring that up because I thought it's such a powerful point, because like your life trajectory could have just gone totally different. Like obviously it seems like you made the right choice, doing what you did, but like thinking in that manner, allowed, a different outcome for you. And I just, these are things I think on too, probably all people of our background in, poker playing, etc. So
that's interesting, and it's interesting for me because I would have given a finger to work on that GS desk. So it's like, oh, he hesitated. I'd be like, they're like, would you like a yes? I'll take it.
But this guy,
James,
but
I think that was ultimately probably one of the reasons I didn't do that well there initially, was because I didn't have the hunger and the passion for it, like the other kids did.
Well, it's just the history of that firm. You've got guys like Henry Weinberg or Sidney Weinberg starting as a janitor's assistant at $3 a week, cleaning spittoons, then rising to the president of the firm, and then his son too. The Weinberg dynasty there. And you have Treasury secretaries, Robert Rubin, all these people coming out of there. So it's sort of like the holy grail of financial institutions.
No doubt.
At the time,
no doubt. Yeah, it's good to have on the TV. No doubt about that.
Yeah, no kidding.
So what was it about market making, James, that you struggled with? I know you said maybe passion. Like what was it? Because I imagine once you went to the buy side that was something that was more suitable for you.
Yeah, I think basically I didn't really know much about trading or the functioning of the markets, except for my best friend at the time. He bought me for my 21st birthday a copy of Market Wizards.
Oh yeah,
by Jack Schwager.
Classic.
And Market Wizards and New Market Wizards, and I devoured these sort of trading books or interviews with the top traders, and they were all having views on the economy or stocks and betting on it, and it was basically the buy side. And I thought when I signed up to trading, that was what it was going to be.
Oh, okay, yeah.
And when I turned up at Goldman for a trading job, market making was a very different thing. You have clients, you have bid offer. You could have been buying and selling cars, not financial instruments.
Well, you're there to provide liquidity. Yeah.
Yeah. So I didn't realize it was a client-facing business, and it was amazing. I think I needed to go to the toilet one day when I first started, and they're like, "You can't just leave the desk without telling someone."
Exactly.
You got to tell the guy next to you, because the client might come on and want a market.
Yeah.
You got to make them a price.
Yeah.
And I think when you're used to being a poker player and doing things in your
Oh
own
yeah.
time and your own speed. That was kind of took some getting used to. Um, um, and I think the truth is that they threw me in at the deep end, and I never really had a mentor there. If there was one
Oh.
guy who just sort of said, "Look, James, this is how it works. This is what a bid is. This is what an offer is. Bullish, bearish. Even hit the bid, lift the offer. All these things. Like I was like, it was like a different language, and no one sort of really explained it. And I think if I went back there now as a market maker, I did a pretty good job. But at the time, it just sort of was. I think I was on a convertible bond desk for 3 months, and I really
Nice.
didn't know. I really didn't know what a convert was. I didn't know what an option was. It was crazy.
Wow. Okay.
How I thought the training was poor. Maybe it's all. I'm not blaming anyone. I could have gone away and really stayed till midnight every night and done the work and found out myself.
Okay.
But I just didn't take to it, and I was very lucky because another poker connection, a friend of mine was an avid poker player, and he knew someone that was running a small buy-side commodity fund that loved poker and was crazy about poker at that time. And he introduced me, and we went out for this big dinner, and we're drinking some great red wine. And we stayed in touch because we had the trading and the poker connection. And I think he always, from the beginning, was like, "You've got to come work for me. Or there's a seat here whenever you want it." And come the end of the second year at Goldman, I was like, honestly, this isn't for me. I'm going to try the buy side. So it was actually a big step down in terms of size and prestige.
Yes.
But I was very lucky because I went to this small commodity shop, basically, prop trading house.
Yeah.
But it was the boss's own money, and it felt much more like the sort of the congenial atmosphere amongst like young poker players that I was used to before.
Yeah, because see, so you didn't have that culture at Goldman where the old guys would take the young guys out drinking at night, and
No.
you'd learn. So that
maybe
didn't
they did.
exist.
Maybe they did, but they didn't invite me.
Oh, okay.
But I don't know. I don't think
Okay.
so. I don't think
All
so.
right. Yeah, because that's how I learned. Because the old guys would take you for a beer and go, "Okay, kid, you really screwed up, but here, this is how we do it next time, right?" So,
well,
I
maybe
think
that's
it was
like the
more corporate. People were in at
right.
6 a.m, leaving
Yeah.
at 5 or 6 at night. They want to go home to their family. There just wasn't that atmosphere.
Yeah. I was early 90s.
Whereas, funnily enough, that prop shop I joined, the main boss that gave me that job, he was actually, I think he got divorced the year before, and he had plenty of time in the evenings, and he'd invite like literally the whole desk out to go drinking in like basically his favorite Italian restaurant. We'd just go there. Timmy was on the table, and we'd sort of drink and talk about the markets all night.
Nice.
And
Good
that
times.
was really very lucky that I fell into that.
Oh, that's nice. That's nice. That's how I was raised in the business. So that was that's a nice environment to be in. Definitely.
Yeah. So you go from so it's definitely it was like a corporate environment. Then you have more of a like you said, a cozy environment. I could see that. So when you're on the buy side, James, like tell us a little bit about I guess your trajectory through the buy side, your trading style, et cetera. And yeah, go ahead. Yeah, go with that.
I think no one tells you how to trade, and there are lots of different styles to do it. I probably, I read those Market Wizard books so many times that I tried to take the pieces of information from that made sense to me and fit in with my personality a little bit from the gambling background to trade like that. So I was basically a directional trader, took a view, made a bet, wouldn't say necessarily had tight stop losses, but overall was always cognizant of the downside. So thinking about everything in terms of risk reward, it didn't really matter what I was trading, whether it was an equity, a bond, a commodity, you name it, I probably traded it at some point. But there was no quantitative trading for me. It really was sort of do research by reading and watching price action and talking to other people and just getting involved and seeing and feeling a trade, feeling the market.
Definitely. Did you and when you were doing that, so I guess there was, very, very little sort of algorithmic trading that the prop firms use now for execution. So were you guys executing using algos, or was that just starting, or?
I think when I first traded, yeah, it was voice broking. I sort of give
Yeah, yeah.
the orders to the broker, and they'd execute it. And then I think, a few years after I'd started, we had the direct execution on our desktops, and I had an assistant that would click the buttons. I never actually bought or sold myself, because for me, having that on my desk would be like a slot machine, and I just trade too much,
Yeah,
over trade.
yeah.
So I always preferred to give my order via someone, whether it was a broker or an assistant,
Smart,
or a trading desk.
smart.
But most traders do the orders themselves.
Yeah, they like to get a feel for the market. I know I do. Yeah, definitely.
Mm.
Yeah. Oh, interesting. Yeah,
Yeah.
that's really interesting.
So James, did you, one of the things I noticed when I transitioned to poker, to trading from poker, and working, talking with newer people, I realized like I almost, not to say like I'm better than anybody, but because I've had gambling experience, a certain, I guess as far as losing and the mindset that goes into trading, I didn't have to work on. It was something I already developed from poker. Did you find that with when you went to the buy side, that these things, you just had to kind of learn more of like the technical aspect of these things, like the losing, handling losses, et cetera, things of that nature? You maybe had a leg
I
up on
think
those
that's fair to say. I think it's fair to say, yeah, that, sort of, I guess I started gambling when I was 15 or 16. So by the time I was prop trading on the buy side, I was probably 25, 26. So, I'd had 10 years of gambling. I don't use like that word gambling. In the book, I sort of use quotation marks around it a little bit.
Right.
And the editors are actually saying, why are you using quotation marks around gamblers? You are a gambler.
Mm-hmm.
And I was trying to explain, well, no, not really. Try and make plus EV decisions.
Yeah, we're edge
You could
gamblers.
you could say crossing the road's a gamble. It's just a question of how much of a risk you take. But yeah, I guess that kind of stuff is built into me really. But it was learning the fundamentals of the market, which was, or still is, much tougher.
Yeah. Because we work, well, JJ works with them. I'm kind of there for the ride, et cetera. But because a lot of people have to, like, that's more often, I think probably the more important part is people going on tilt, right, James? Like people losing, going on tilt, doubling down on their position, and it's like, hey, like that's we gotta get this part under control first. But yeah, so yeah, go ahead.
Interesting, because I noticed, as a trading educator now, that Ray has only been trading 8 months or so, but his learning curve has been better than most who start just green without any sort of risk management experience. I guess they call that bankroll management in your world or whatever it is.
Yeah.
But that makes a big difference.
Mm-hmm.
Interesting stuff.
Yeah, absolutely.
I think the way, there's two parts of trading. One is having the right trades or the fundamentals, and the other side is the bankroll management. And first and foremost, you've got to have an edge. You've got to have the fundamentals right, because however good your bankroll management is, if you try and play roulette, for example, you can't win.
Mm-hmm.
If the odds are against you in the long run. So you've got to have an edge in what you do, but then just as equally, there's no point having an edge if you can blow up or not stay in the game or not control it. So I guess that is a different sort of discipline. And I think I was actually definitely my strongest part throughout my career, until the end, probably, actually, where the money got much, much bigger. And it's completely different. It's one thing sort of saying, these are the odds and this is kind of what you should be doing. But when the numbers become so insane, you really have to work every day on the mental side.
I can imagine.
Of the game. Yeah.
Now, when you were managing 1.6, Was that your own fund, or were you a part of a group of funds, or how did that?
Well, it was I was trading at another, not more, but another. I left more by this stage, and it was another US sort of pre-eminent macro hedge fund called Graham
Oh,
Capital.
oh really?
And yeah,
Wow.
and the way, oh, you know Graham? I mean,
Yes. Yeah.
they now, when I joined, it was about 50% quant, 50% discretionary, and I was a discretionary trader there. Now it's much more quant heavy than discretionary, but they still have discretionary. So I think they had about, when I joined, 3 billion under management,
Hmm.
and they allocated that 3 billion for the discretionary fund to a bunch of traders that work there, and it was a complete meritocracy. So the
Wow.
better you did, the more they give you. The
Nice.
worse you do, they sort of take it away. And
Eat, eat
you
what
know,
you kill.
yeah. And whilst okay, I had quite a lot of money, or 1.6 yards under management. That's at the leverage level. They'd already put the leverage on the fund side on that, so
Oh, okay.
it wasn't like I was managing that much for clients. It was probably more, I don't know, say they use 5, 6, maybe
Yeah.
even 7 times leverage at times.
Yeah.
So maybe I was running uh, probably close to 300, but
Yeah.
5 times
Leveraged.
11. Yeah,
Yeah. Yeah. That makes
probably
sense.
like that.
So, just out of curiosity, I just interject because of the times that we're going through now, and you've been in macro and a lot of new retail traders, and I've got to ask because most retail traders think macro is something that you get next to the kale at Whole Foods, and now it's important, right? So, I want to give the folks at home, right, an inside look into what you guys are doing and thinking at moments like this, what your analysts are looking at, how you're pulling back on risk. If you could just kind of tell people what's going on at night in these places when the markets are like this.
Hmm. Well, you've got to understand that the markets aren't like this very often.
Exactly.
So that's not the bread and butter. Macro in general has underperformed massively over the last decade, because essentially macro is betting on interest rates and currencies,
Mm-hmm.
and in general, and usually volatility, and we've had such low rates without moving. If rates are negative to zero across most of the world, or moving within a 1% bracket for years at a time, and the majors, most of the FX cross pairs sort of not moving either. It's been a very sort of different game to this uh, explosion over the last month, which has probably taken everyone by surprise. What it has done, because the corona is not, the financial crisis was something where, in '08, where subprime uh, unraveled relatively relatively slowly.
Yes.
There were lots of
Yes.
signposts.
Yes.
Some of the, was it Bear Stearns funds went, hedge funds were sort of in trouble, and the market didn't peak till a year later.
Yeah.
This has happened, within a matter of a month or two.
Yeah.
And when you look at the chart, it's just devastating how except for 1987, the speed of this move has been something else. So
do you at all look at market structure? I mean, for the last 4 months, I was telling people this market is going up like a penny stock pump and dump, and it was basically they cut off the sell, they took the price higher, and then pulled the rug, which I used to do 20 times a day in different stocks. And I can't believe the way this market is traded this way. And the do you guys look at market structure at all? Because we look at something called market profile, which is it shows us where value is in these markets. And when you see a market just going higher and higher and higher without building out a trading range, that kind of scares guys like me. You know, did you look at stuff like that in your
in
sort
terms
of
of charts and ranges, or market
um,
participants,
or actually market structure? I find like say I'm taking a stock from $5 to $20. What I'd like to do is I take it up to from 5 to 10, drop it down to 750, trade in a range from 750 to 10, let it bounce around a little, build up a trading range for a couple of weeks, then move it up, build it, that sort of thing. And we don't have that in this market. You just kind of just shot right up without any backfilling. They never backfilled the shorts on the way up on this thing. So I'm just curious if you folks look at anything like that at all.
Sorry, I'm not really with you on this one.
Okay.
I mean, the market was such sort of low vol, slow conditions building up, and it's pretty amazing. I heard an interview with Tudor on TV, Tudor Jones, when he was, I think it was in Davos, so that must have been mid-January.
Yeah.
And he said he's bullish in general, but he wouldn't be long one single thing right here of any asset class, basically, because this corona is breaking out. And I'd never heard of corona. This was the first time I thought he was talking about Kuroda, the Japanese central bank. I hadn't heard of corona mid-Jan. And it's amazing because the market went up for another month, even with this going on, and the vol was at the low, and it really wasn't until towards the end of February, when they pulled the rug. So I think it's, it seems so easy to say, oh, the market's at the high, and this thing, if it was just sort of looking at some of the theory from the book I've written, you'd say, well, if we look at the risk reward, okay, the market might go up slowly a little bit more, like it sort of has done for the last, decade, really, just grinding up. But okay, you might lose 1, 2, 3, maybe even 4% being short for the next 2-3 months. But if this virus does spread and has serious repercussions, the downside could be massive. So the risk reward was just incredible to be short. Whether you do that when you're in the seat or not is another matter. It's easy to say things in hindsight.
Exactly.
When you're sitting in the seat, I would have thought, look, I mean, it's hard for me to judge because I'm naturally always been a pretty bearish trader, and I made the majority of my money in down moves. And it is, this is the most awful thing for the world, but from a trading perspective, it's been frustrating for me for the first time in over a year, where I've really wanted to be in the action, so trading every second, these last few months.
Yeah. So you haven't been trading the past couple of years?
Well, I've been trading PA, but I haven't been sitting in a macro seat for the hedge fund the last year, last 2 years now.
Yeah. Okay. James, I want to, I want to bring it back to like the bankroll management just for a second, because you mentioned for you it was tough when you I guess when you started trading larger, and that's always been a difficulty of mine, whether like in poker or trading, right? So moving up stakes in poker, cash games was always a tough thing. It's like, you take shots at games, right? But if you lose, it's like so much more substantial to your bankroll because you're playing double the stakes, and it would always affect me a little bit more mentally. It's like, oh, I just lost what I would have won all of last week, or, you know what I mean? Like things of that nature. And even adding size to trading, it's like that adds that extra pressure. And how do you practice? Like, how do I get better at this? Like, how did you, or is it the size just too much?
I think I had a slightly different experience because in poker, I never had an issue with this, because when you sit down in the game, you choose what chips you're going to put out in front of you, and how much you can lose if you set the stop loss effectively.
Yeah.
And you can predetermine that decision a week or a month in advance, how much you're going to risk this day, this week, this month. And you need to get comfortable with that downside number before you even start. If you can sit down and say, okay, I know I'm going to lose, or say my bankroll is X and I'm prepared to lose 20% of that bankroll in the next 3 months, or 1 month even, and you think, okay, so this is how much I'm risking, what's the biggest game or the most profitable game I can play in for that money, and then just play to your limit. And if it goes wrong, you know in your mind what you've lost already, and you're comfortable with that. I found in trading it's a little bit more difficult to do that, because unless you're just buying options, or set a very stringent stop losses. I mean, the size I was trading, you couldn't just set stop losses. There was no liquidity to get out of a lot of positions that I'm in. That the market's ticking day and night, and you don't know how much you can lose. It's much harder to judge your bankroll or the swings you're going to have. And the markets are so unpredictable. I mean, in a poker game, you can lose 1, 2, 3 buy-ins, maybe 4 on an outside day. You look at the market, what's happened, and we had the whole of last year, the S&P didn't have 1 5% drawdown, and now we've had 3 9% moves, swings in a week. First time since 1929. So these kind of multi-move standard deviation moves seem to happen much more often than any model will predict, and it's much harder to judge your downside. I think always, I think I finish the conclusion to the introduction of my book saying a gambler, the first thing they think about is what's the downside. Right. So in terms of buying the book, it's $20, whatever it costs roughly to buy the book, and maybe 9 hours of your time if you're going to read from cover to cover. And then you can think, okay, what's the upside? But if you protect yourself against the downside first, and obviously try and play with what you're comfortable with. You don't go to trading massive size overnight. Same as poker, you have to build the bankroll. Okay, occasionally you take a shot in a game which is a bit out of your comfort zone, but the steadier you can do it. I mean, there's no rush. There's always another game. There's always another poker game. Right. There's always another trading day. So instead of trying to be a hero day one, if you can build it over a long period, and a trading year even feels like an eternity. I mean, it's what is that? I can't remember how 200 odd trading days in a year or something.
Exactly.
Like that. It can feel like a very long time. Mm-hmm. So it sounds boring, but patience and just, I think the key is to be in the right frame of mind. So when those fat pitches do come, you can take them.
Mm-hmm.
Right.
Yeah.
It's always a tough thing for me to like balance like the aggression, James, right? It's like, because I don't want to be too passive. I don't want to be too aggressive. And so like, that's what I'm always like thinking along the lines. And I like what you said. I believe you said this in the book. It's like, you need a little bit of pain, like on your losses, but not too much as to it clouds your judgment.
I mean, it's got to sting a little bit when you lose. Otherwise you just don't care. I mean, like if I play in a home game, for $100 or matchsticks or whatever, it's impossible for me to play well. But if I play for, I don't know, $1 million swing in the night, it's going to be pretty tough to play well as well.
Mm-hmm.
So I guess it's just finding the right number for you. Some people play very small relative to their bankroll. Other play, not everyone goes by Kelly. It's sort of finding the right level for you.
Right.
Yeah, for me that worked when it stung a little when I lost. But wasn't. I didn't really think about the money during the game.
Right. Kelly, you're talking about the Kelly criterion.
Yeah, I mean, obviously, if we're all machines, we probably follow that. But that doesn't always work out like that in reality.
Right. Do you just want to explain to the audience?
Yeah, I have no idea what that is.
I think in very simple terms, Kelly basically says if you want to grow your bankroll the most efficiently, you should wager the percentage of your bankroll in accordance to how much edge you've got. So if you're tossing a coin and you've got 60-40 and you've got a 20% edge, you should bet 20% of your bankroll. But if your edge is only 2%, if you've got a $100 bankroll, you only want to bet $2. Just so in accordance, which kind of makes sense. If you're 100% favorite, you're going to bet everything. If you've got zero chance to win, you're going to bet nothing. And it's just pretty logical sort of straight line. But in reality, it's hard to work out what your edge is in advance.
Yeah, right.
When you sit down in a poker game or you're trading, like how do you know what your edge is every bet you make? And B, sometimes that great game is going to come about which is slightly too big for your bankroll, that you don't get to determine how often it plays or what size it is, and you've got to make that judgment call at the time.
Mm-hmm. Yeah.
So I think one of the points I tried to make in the book was that it's all very well being a theoretician, but in reality you've got to be pragmatic and and do what you feel comfortable with, and what the circumstances
Oh yeah.
demand.
Oh yeah. That's another tough thing. I think for myself too, James. Especially like when poker, when the solvers started getting real popular. I'm not sure how much poker you still play, but was balancing playing an equilibrium strategy but I'm playing against someone who's not playing an equilibrium strategy, and knowing that, hey, it's actually probably better for me to play exploitative here. And then like that was a interesting transition for me. So I guess for the audience who doesn't play poker, it's just more of, being practical versus theoretical. And I think that's another thing, finding that sweet point, right?
I think what I try and say in the book is, if you find the theoretical equilibrium to start with, or get close to that, then you're in a position. If you start as your base case,
right?
Then a very simple example. Say you're playing rock paper scissors. If you're playing a random opponent, if you start off always randomizing your choice, whether you go rock paper or scissors, I think everyone's familiar with that game, right? Where you go, if you pick a third each and randomize it, you can never be exploited. Like, no, however great a player you're playing against at rock paper scissors, if you just randomize your choice, you can't be beaten. And now, so if you go into the game playing like that, and now you observe your opponent's tendencies, and if they go rock a little bit too often, then you want to up your paper percentage, and so now you can start exploiting.
Absolutely.
But if you can find that default equilibrium in whatever game you're playing, you're off to a good start.
Right. No, well said. Another thing you stated in the book that I like, that you state that all successful gamblers have a strong understanding of three facets. So the fundamentals, strategy, and execution. Can you just talk, briefly on that?
I think the fundamental is the gambling theory. So the expected value, what are the odds, making estimations, or when it comes to the markets, fundamentals in the market. What's the supply, what's the demand, what are the things that are going to move the price, and then the other section is strategy. So I would say strategy and tactics. So how are you going to address this game? What's your game plan, from the top down and also from the bottom up, and constructing a sort of a vision of how things are going to play out, and you have a base case and then adjust as new information comes in. But always thinking, like, where's my edge? Is this a zero-sum game? Is it how can I exploit? What are the tactics? What are the patterns? And so on. And then the final part of the book is, that's great having a theory, it's great having a strategy, but if you can't execute it in reality, and I guess that's a mental game, then it's only good in the textbook. So I thought that was the sort of way I ended up splitting the book into those three sections.
Yeah, absolutely. Yeah, no, perfect.
Looking forward to reading the book. You kind of remind me a little bit of Victor Niederhofer, the tennis, the trading, education of a speculator. I'm kind of.
My friend that gave me that Market Wizards book when I was 21, he gave me three books. He gave me Market Wizards, New Market Wizards, and that Niederhofer book.
Education of a Speculator. The Old Man in the End is probably the best trading story.
I mean, I've never met Victor, but I enjoyed reading the book, and he's certainly a lot smarter than I am, that's for sure. But he sounds like a complete nut with some of his theories.
No kidding.
And I think he swings a lot more in his portfolio than I ever did.
He's got some pretty good nerves, that guy.
It's nice to be uttered in the same breath as him, I guess.
Yeah. And I guess one more concept I want to talk to you. Obviously, I don't want to ruin everything in the book, but the concept of inflated wins. You speak on that for us, James?
Yeah, I mean, I think it's the default human tendency is when you're winning to take profits, and when you're losing to wait to get unstuck. And whether that's poker or the markets or your personal life, whether you're underwater in a house or your mortgage, it's just very fundamental to. I don't really know why that is, but it's just so the opposite of anything that any strong gambler does, or professional. You want to let those wins ride as long as you can, and clip those losses. And the main reason is because you play better when you're winning and you play worse when you're losing.
Right.
So it's a psychological thing. I mean, the machine doesn't look whether they're winning or they're losing. They just look at going forward. Are you a favorite and by how much? Or what's the state of the game? But a human, when you get caught up in certain activities, whatever it happens to be, subconsciously, winning breeds confidence, and then most people play much better as a front runner than when they're behind. And that's the time you want to maximize, when those spots are there and you're feeling good. And I was thinking about it when I was writing the book, for example, that there was a lot of people say, if you're writing a book, sit down at 9 a.m. and write till either you've written 3,000 words in a day or till 3 p.m. So say like 6 hours, maybe stopping for lunch, and just do that every day. And I tried that, and then there were sort of 2-week periods where I didn't really have writer's block, but whatever I was writing was completely useless, and couldn't get down what I wanted to say, and it was just a really frustrating process. And I thought, why am I doing this? Like, if I was gambling and I'm losing, I'd just take a break. So I stopped writing and did something else, or did another chapter that I wasn't struggling on. And the flip side is when things are going well, I'm not going to stop at 3 in the afternoon. I'm going to sort of sit there for 2-3 days straight and not sleep. Not even want to go to the toilet, or maybe like have takeaway like at the table. I'm like, you can't drag me away when I'm on a roll or winning.
Yeah.
And I think I don't think that's necessarily natural for most people.
Right. Yeah. And do you have any theories, right? Because, I'm thinking this as well as I'm reading your book. Like, why are a lot of these concepts counterintuitive to us or to people, without gambling, lack of a better term, gambling experience?
Honestly, I don't know. I'm not. I think one of the things I've tried to do in my book is be practical and use my experiences that I've drawn on sort of the way I see it. A lot of other material out there is more academic or quotes psychologists or theories like that. I don't know the reason. And maybe you could say, I think the only thing I'd say is like the middle class have such a good life relatively now that they don't need to take risks.
Oh, okay.
If you go to school and manage to go to college and get a decent middle class job, you have a pretty good life.
Right.
But why would you become an entrepreneur? Why would you become a gambler? Why would you take risk when obviously the more you've got to the less you've got to lose, the more you can go for it. That's why a lot of immigrants have become so successful. George Soros maybe be the extreme example of that.
Exactly.
But say my grandparents came over from Eastern Europe and to avoid the Holocaust, and all of them, had to be entrepreneurial. They had to live on their wits. They had to start businesses because they weren't going to get a job. They couldn't be a doctor or a lawyer. And today, if you just keep your head down and you're slightly above average, you're going to grind out a pretty decent life. So, maybe that's the reason why people are sort of relatively risk averse, I would say.
Yeah,
that's true.
I mean, that's a solid theory.
I haven't read anything to back this up.
Quickly, have you read The Alchemy of Finance? Because I tried reading it when it first came out. I couldn't figure the damn thing out. I'll gotta try and read it again.
I thought the first half you could probably live without.
Okay.
Fiction, but the second half where he does George Soros does a trade blog basically, and the second half of that book is just incredible. If you read, and there aren't actually that much literature on trading markets that really influenced me or I think worth reading, but that's one of them because it shows how he goes through the same issues like we do. Like the first, I think he chronicles a year of his trading, and the first half of the year, oh my God, he was crushing it. Like the size of the positions were just crazy. Things would go against him, and he was just like, no, oil's going down. I'm staying short. It doesn't matter if it rallied 10% in my face. I'm going to increase. It's just amazing. And he made so much, huge percentage return, and everything he said sort of happened. And the second half was just like the complete opposite. He went into like lockdown mode. One day he was long, one day he was short. He was trying to hedge something with something else, and it was like complete sort of mist or fog in his mind. But he managed to sort of, I think, roughly break even in that period. And it just shows you that even the greats like that, you know, you go through different cycles.
Yeah.
And sometimes you're seeing the ball, and sometimes you're not.
Definitely.
Like, I'd give that second half of that another go, maybe.
Yeah, I think I will. You know, yeah, it's true. Sometimes
It's not easy. I had to. Sorry to. I mean, like, I remember I think I was reading it by the pool, and I think I went to a conference in Miami or something, and I think I had to read that book like 3-4 times on the plane that second half to fully understand what was going on in his mind.
Now, he's from your alma mater, isn't he? He's ex-London School of Finance, is that?
LSE, I think, yeah, I think he was, well, he
Or economics, right?
His guru was Karl Popper, who was from.
Oh, yeah, fascinating stuff. Amazing.
So James, tell us about your company, Cerebral Gym.
Well, actually, I'm actually out of Cerebral Gym now. I had an idea. I'd seen how gyms have gone away from sort of membership-based to class-based gyms, where you go and you take a class and you join in, whether it's Barry's Boot Camp or Soul Cycle. And I thought, could that translate and do the same thing, but for intellectual activities, from learning Chinese and learning to play bridge, opera appreciation, coding, and all sorts of things. Like, could people come and take a class in a group in like this sort of gym center, but for the mind?
Mm-hmm.
And I played around with it for about a year, and for various reasons, it didn't really work in that format. And someone else has actually bought it off me, the idea, and they're running it in a slightly different way now. So I'm not actually involved with Cerebral Gym anymore.
Okay.
I'm still cheering it on from the sidelines.
Good
All
stuff.
right. Mm-hmm.
Are you going to start back into? You going to get your own fund going here?
Well, I'm actually tempted. I've been speaking with an ex-poker player friend of mine who has actually got into quant and AI trading, and he's had a Bitcoin fund which has produced, I think, 1,100% over the last 2 years.
Nice.
And it's not like he's been long only or short. He trades on a 5-hour time frame.
Okay.
But I've never really been into quant trading or Bitcoin, but he's sort of got an algorithm that's working really well. He's said to me, James, could I run the business of it or manage the business for him, and he'd do the trading. And that kind of sounds appealing to me, because I'm not really in a space right now where I've got other things going on, lots of other projects, where I don't want to spend 15 hours a day in front of the Bloomberg like I did for the last 10 years. So that might be a sort of good compromise to sort of get back in the finance game.
Nice.
And you know, I miss the trading and so on, but without you know, the dedication you need to try and get decent returns and beat this market is immense.
It is, definitely, very much so.
Mm-hmm. Mm-hmm. All right, so that's it for me. Jay, any more questions for our guy?
No, it's just really, really, really nice meeting you, and you know, it was nice to give our viewers, our listeners, a little bit of a look behind the curtain. We try and do that every time we do one of these, and we have someone from the other side of the desk. It's nice to sort of lift the curtain a little bit. Thank you very much. Much appreciated.
Thanks for having me on. It was nice to get away from the Corona headlines for a few hours and just talk about something different, or take a walk back down memory lane. But I really enjoyed it, guys, and good luck with everyone, and stay safe with this outbreak, and go and crush the markets.
Yes,
Thank you,
my
sir.
man. I appreciate it. So that concludes today's episode of Confessions of a Market Maker. If you guys enjoyed the podcast, please rate and review it for us. If you guys are interested in learning market profile, keen on trading a liquid market, et cetera, come join JJ and I at microefutures.com. James, tell listeners where they can find you, and I guess anything else you'd like them to know.
Well, I haven't really got. I'm at James Vogl. That's James Vogl, no E, just Vogl on Twitter. I think I'm on the same kind of name on Instagram or Facebook. But yeah, I'm around, and hopefully the book will come out next year, and I'll have a sort of slightly higher profile. But at the moment, I'm sort of still happy to lie low.
Well, definitely. I
No,
mean, definitely when that time comes around, I would love to have you back on.
definitely. We look forward to reading the book.
Okay. Thanks, guys. Cheers.
All right, all
All right.
right. And so for James, he's JJ. I'm Ray Ray. You guys use stops though.
Have a good night, everyone.